The Fed signals interest rate hikes. Hello, today is Monday, June 21st, and in this week's market recap, new messaging from the Federal Reserve on interest rates and inflation last week led to a broad retreat in stock prices. So that's what we're going to talk about here today. But before we do, we had an information-packed event last Wednesday, and I've posted the recording of that event online. I provided a performance update on our Smart Mix strategies, and we have 9 of them now. So I went into each one of them, talked about performance, risk, a lot of different details in there. We also looked to the future with a discussion on the positives in the markets and the economy, potential headwinds ahead of us, as well as both a short-term and a longer-term outlook. You can find the recording of this event on our website. If you go to investwithccg.com/events, I've also put it on our Facebook page as well as on my YouTube channel. The easiest one is probably to go to the YouTube page, but or just go to your browser and type in investwithccg.com/events, and you'll find the recording from that event. So with that, I'm going to go ahead and roll the intro, and then we are going to dive into this week's economic update.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
Okay, so new messaging from the Federal Reserve on interest rates and inflation last week led to a broad retreat in stock prices. The Dow Jones Industrials Average dropped 3.45%, while the Standard & Poor's 500 lost 1.91% last week. The NASDAQ Composite Index slipped 0.28% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, fell 0.64%. The Federal Reserve's announcement on Wednesday that interest rate hikes may likely occur sooner than expected and that it had underestimated the pace of inflation unsettled investors. The hardest hit groups were cyclical stocks like energy, materials, industrials, as well as financials and consumer staples. Losses accelerated into the week's close on comments by St. Louis Fed President James Bullard that the first rate hike could be as soon as 2022, next year. The bond yield curve flattened as short-term interest rates rose in anticipation of rising rates and longer-term rates declined, reflecting a view of an eventual economic slowdown. Last week's FOMC meeting announcement took investors by surprise as the Fed indicated that 2 rate hikes in 2023 were likely. It was as recent as March that the Fed had signaled that rates would remain unchanged until 2024. The Fed also raised its inflation expectations to 3.4%, up from its March projection of 2.4%, though it continues to believe that price increases will be transitory in nature. The Fed provided no indication of when and by how much it might begin tapering its monthly bond purchase program. All right, so remember today, later on today, I will be sending out our full weekly economic update. If you're not getting this and would like it, you can subscribe at our website. In this update is also our financial tip of the week, companies reporting earnings, financial data that we're watching, plus a riddle for you, as well as a quote.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.
Bye.